Today we're going to have a look at the 2018 Leaving Cert Ordinary Level Final Accounts question, the sole trader question. As with all question ones, we're given a trial balance, we're given some additional notes, and we're asked to prepare a trading profit and loss account and a balance sheet at the end of the year. To start off, we will have a look at the notes. The first note says the stock for resale at the end of the year was 21,000. So that's just our closing stock of 21,000. That closing stock will go in cost of sales in the P&L, and it will also go as a current asset in the balance sheet, as like always with closing stock. Note number 2 is a stock of stationery at the end of the year was €1,300. So stock of stationery is €1,300. This will be taken away from stationery in the P&L because closing stock you take it away. So we're going to take it away from stationery in the P&L, and it's also going to be a current asset in the balance sheet as closing stock is always a current asset. Note 3 says included in insurance is a cheque for 900, which is for O'Reilly's private house. So because that 900 is for a private house, it has to be taken out of insurance because it's not a company expense, and it has to be put into drawings, which is just stuff the owner takes out for their own use. So that €900 of the insurance, if you look at the insurance from the trial balance, if I go back to the question, from the trial balance, if I go down and I will see insurance is 8,200, but 900 of that is for his private expense. So I'm going to take away the 900, which will leave me 7,300, and that's what we'll put in admin expenses in the P&L for insurance. And then drawings. The 900 has to be included in drawings. So from the trial balance, I can see that drawings is 12,200, and that 900 has to be included in drawings, which will bring my drawings up to 13,100, and that's the figure that will go in the bottom of the balance sheet in the finance by section. Note number 4 says provision should be made for the interest due in the loan. The rate of interest is 8% per annum. So I have a loan here, a term loan of 60,000. So the loan was 60,000. The interest rate, it tells me, is 8%, but I didn't have that loan for the full year. I only got the loan on the 1st of the 4th, so I had it for 9 months. So to calculate the loan interest, it'll be 60,000 by 8% by 9 over 12, because I had it for 9 months. So 60,000 by 8% by 9 over 12. So the loan interest should be 3,600 for the year, and that's the figure that we'll take away at the bottom of the P&L, the loan interest for the year. Now I have to go back to the trial balance and see was any loan interest paid, and I can see here there was loan interest paid of €1,500. So if I take away the €1,500 that was paid, it will leave me with loan interest due of 2,100, and that's the liability that will be in the balance sheet. I still owe 2,100, so that will go as creditors less than 1 year in the balance sheet. Note 5 says advertising is for the year end at 30th of 4th 2018. So 4 months of advertising is for next year, so we have advertising prepaid of 4 months. So if I go back to my trial balance and I find advertising, so advertising here is 5,400, but of that 4 months of that is for next year. So if I look at my notes, advertising per the trial balance is 5,400. Now I have to take away the prepaid bit. So the prepaid bit is going to be 5,400 divided by 12 because it's for the year, and 4 months of that are prepaid for next year. So I'm going to be taking away 1,800, which will leave me with 3,600. So the advertising prepaid is good. It will go as a current asset in the balance sheet. And the total advertising for the year, the 3,600, which relates to this year, will go as a selling and distribution expense in the profit and loss account. Depreciations. I need to work out the depreciation of buildings first of all, which is 2% of cost. So if I go back up to my assets above here, I can see the buildings cost is 400,000. So I'm just going to be getting 2% of 400,000. So depreciation of buildings worked out to be 8,000. Delivery vans, it's 10% of the book value, not of the cost. So if I look at my delivery vans, the cost is 64, the depreciation is 12, so the book value must be the difference between the two of those, which is 52,000. 64 minus 12 is 52,000, and I'm getting 10% of that. So 64 minus 12 is 52,000, and I'm getting 10% of that. So just be careful whether you're asked as a percentage of cost or a book value. And finally, last depreciation we have to get is office equipment, and that is 20% of cost. So the cost of office equipment is €20,000. So I'm getting 20% of €20,000, which is €4,000. Now, the depreciation of buildings and the depreciation of office equipment are both admin expenses, and the depreciation of delivery vans, is a selling and distribution expense because it's to do with distributing their product to customers. So they will all go in expenses, and they will also go into fixed asset note in the balance sheet. They will be added to the accumulated depreciation at the start of the year. So that will take place in the fixed asset note in the balance sheet. They will all be added on. Note 7 says provision for bad debts to be adjusted to 5% of debtors. Okay, so at the moment, if we look at our trial balance here, at the moment we have a bad debt provision of 2,600, and we want to change it to 5% of debtors. Now, what is our debtors figure? Our debtors figure is 36,200, so we want to get 5% of that. So the bad debt provision, as we said, from the trial balance, it was 2,600. Now it should be 5% of 36,200. So 36,200 by 5% is equal to 1,810. So it should be, sorry, it is 2,600 in the trial balance. It should be 1,810. So the difference is 790. Now, to get it what it should be, we actually have to reduce it. So it's a decrease in the bad debt provision. Sometimes it will be an increase in the bad debt provision, sometimes it's a decrease. A decrease in the bad debt provision is good, so we'll go in operating income in the P&L. If it was an increase in the bad debt provision, it will be bad, and it will go as a selling and distribution expense in the P&L, but this is good. And then the full amount of the provision, what it should be, the full amount of what it should be, is taken away from debtors in the current asset note in the balance sheet. So that's our notes looked at. Now we just have to start off with the accounts. So the first account we have to do is the profit and loss account. So as always, with the trading profit and loss account, we're going to start off with our sales and take away any sales returns that there are. So from the trial balance, we can see that sales are 583,000. And we're going to take away sales returns or returns inwards of 13,000, because they will reduce our sales, which will leave us with sales of 570,000. Less cost of sales is our heading. So the first thing we'll always have in cost of sales is opening stock. And again, this will always be from the trial balance. It should never change. So stock on the 1st of the 1st, 2017 from the trial balance is 27,000. We're going to have purchases, less returns if there are any. So from the trial balance again, purchases are 192,000. And we're going to take away purchases, returns, or returns outwards of 5,100. Sometimes there may not be, but if there are purchases, returns, that have to be taken away. And then carriage inwards. Is there any carriage inwards in this question? No, there's no carriage inwards in this question, so that's 0, but sometimes there is, so we might as well have it there. So if I add all of these, it comes to 2,139,000, and then we're going to take away closing stock. And the closing stock, I will get from note 1 to the accounts up here, get the closing stock of 21,000. So 2,139,000 minus the 21 will leave me with a cost of sales of 192,900. And as always, my sales less my cost of sales give me a gross profit of 377,100. Now we're going to have to add any other income that we have apart from sales. So the first thing is the decrease in the bad debt provision that we spoke about a couple of minutes ago. There was a decrease in the bad debt provision as opposed to an increase. So the decrease is 790, that will go in operating income. And there's also a discount we received. Now it says received here, so we know that it's income. It's a credit balance of 1,300, but sometimes it may not say received. And discounts, excuse me, can be either income or expenditure depending on which side you are. So if it's a credit balance, it's income. If it was a debit balance, it would be an expense. It would be a selling and distribution expense. So stuff like discounts, rent, and commission, they can be income or expenses, so you just need to be careful. So this discount received anyway, €1,300, so that will go in operating income. So my total operating income is 2090, and added to my gross profit above gives me 379190. Now I have to take away my expenses. I have admin expenses and selling and distribution. Selling and distribution are anything that expenses related to sales or distributing the product to customers, and the rest of the expenses will go in admin expenses. So my first admin expense is going to be wages, and wages is coming directly from the trial balance of 108,000. General expenses will go in admin expenses also, and again they're directly from the trial balance of 12,500. We're going to do a little note on stationery. So for stationery, we're going to start off with the opening stock of stationery. Now there is no opening stock in the trial balance for stationery. Sometimes there is, but in this question there isn't, so that would be 0. There's no opening stock of stationery here. There is a stationery purchase for this year of 4,200. So we're going to add on 4,200. So the opening stock, as we said, is always a plus, and then we're going to add the stationery for the year to give us 4,200, and then we're going to take away closing stock of stationery. And in the notes we spoke about this. We said stock of stationery is going to be taken away from the stationery, which is admin expense. So my total stationery is going to be 4,200 less the closing stock. My stationery for this year is 2,900. And I'll just move those figures into this column also. Now, insurance is the next figure we're going to look at. And again, we did a note on insurance. So if I go back to my notes, some of the insurance is prepaid. So the insurance for this year is 7,300. After it wasn't prepaid, it was the drawings. So after we took away the drawings, insurance was 7,300. And the depreciation of buildings and depreciation of equipment we've worked out in the notes. So depreciation of buildings was 8,000, and the depreciation of equipment was 4,000. So that will give me a total depreciation, if I added them together, of 12,000. So now if I add all my admin expenses, my total admin expenses for the year come to 142,700. My selling and distribution expenses. So first of all, I have advertising. So the advertising for the year I can see is 5,400. But I need to take away the prepaid part of that. So advertising for the year was 5,400, but I'm going to take away advertising prepaid. And advertising prepaid from the notes is €1,800. And again, we always say that we add stuff that's due at the end of the year and we take away things that are prepaid. So up here, again, we're adding at the end of the year, and the balance sheet's always at the end of the year. So we add stuff that's due and we take away stuff that's prepaid for the expenses. Now, the next figure we have to get is the depreciation of delivery vans. So from our notes, depreciation of delivery vans is 5,200. So if I add up my selling and distribution expenses, they come to 8,800, which will leave me with total expenses. If I add my admin of 142,700 and my selling and distribution of 8,800, leaves me with total expenses of 151,500. So my gross profit after I add my operating income, gives me 379,190, and I'm going to take away my total expenses to leave me with an operating profit of 227,690. Now from that I need to take away my loan interest for the year, the full amount, not what's due to be paid. The full amount of loan interest is taken away at the bottom of the P&L. So if I go back to my note on loan interest, the full amount for the year is 3,600. I'm going to take that away, and that will leave me with a net profit of 224,090. And I'm going to add on my retained profit at the start of the year. Now that's coming from the trial balance and it's 51,400. If it was on the debit side, it would be a loss coming forward. But on the credit side, it's a profit coming forward of 51,400. To leave me with a retained profit at the end of the year of 275490, and that's the figure that will go in the bottom of my balance sheet. Now we have to have a look at the balance sheet. So for the balance sheet, the first place we always start off with our tangible fixed assets. So we're going to get the cost of buildings, equipment and delivery vans. So from the trial balance I can see the cost of buildings is 400, I can see the cost of equipment is 20 and delivery vans 64. So I'll put those in 400, 20 and 64. And I'll total those, I get a total cost of 484,000. For the accumulated depreciation, and not just this year's depreciation, the accumulated, we need to be careful, and sometimes this can confuse students. So we'll look at these. First of all, for buildings. Now, the depreciation, the accumulated depreciation of buildings, there's no cost and net book value here, or there's no line for accumulated depreciation of buildings. So we take it that there was no accumulated depreciation of buildings at the start of the year. So it's going to be 0 at the start of the year. And we have to add this year's depreciation of buildings, which is 8,000. So the accumulated depreciation is 8,000. So the cost minus the book value, minus the accumulated depreciation will give me a net book value of 392,000. For equipment, if I look at equipment into the trial balance, so the equipment cost 20,000 and it was worth 10,000 up to the start of the year because this year's depreciation isn't included. So up to the start of the year, the depreciation must have been the cost of 20 minus what it's worth now of 10. The depreciation must have been 10,000. And then we have to add on this year's depreciation of equipment, which I can get from my P&L of 4,000. So the accumulated depreciation is 14,000. So again, the cost minus the depreciation will be a net book value of 6,000. Delivery vans. For the delivery vans, it gives us the accumulated depreciation. We don't need to work it out. It tells us the accumulated depreciation of 12,000 to the start of the year, and we just need to add in this year's depreciation. So it'll be 12,000 plus this year's depreciation, delivery vans, 5,200 is 17,200. And again, if I take those away, it'll leave me with a book value of 46,800. I can add my accumulated depreciation down. I can put lines underneath both of these because I won't be using these figures again. And I'll total my book value to give me 444,800. Intangible assets. The only intangible asset that there is are patents, and my patents are 24,000, so they will go in here. And there's no financial assets, there's no investments, so my total fixed assets are just my tangibles plus my intangibles, leaving me with total fixed assets of 468,800. On to current assets. So my current asset, my first current asset will always be closing stock. So my closing stock at the end of the year was given to me in note 1, 21,000. My stock of stationery at the end of the year again was given to me in note 2, 1,300. So closing stock will always go in current assets. My debtors less my provision will always go here. So from the trial balance, I can see that my debtors was 36,200. And I have to take away my provision. Now, not the increase or the decrease, the full provision for the year. So if I go down to my note and bad debt provision, the full amount, what it should be, is taken away from debtors and current assets. So the 1810. And it's 5% of the 36,200. So I'm taking it away, which will leave me with 34,390. Now, in this question, if I look at bank you have to be careful with it. Sometimes bank is an asset and sometimes it's a liability, it's an overdraft. So in this question, I can see here, bank is a debit balance of 46,500, which means it's an asset. If it was a credit balance, it would be an overdraft and it would go below in liabilities. A bank is an asset of 46,500. And don't forget about the advertising prepaid. Okay, we said advertising, there's advertising prepaid of €1,800 at the end of the year, which is good, it's an asset, so that will also have to go in there. So in total, my current assets come to 104,990. Next, we have our current liabilities, or our creditors amounts due within 1 year. So creditors will always go here, 22,400. VAT in this question, it's a credit balance, which means it's a liability, and usually it's a liability, but not always, 15,300. PRSI USC again is a liability, it's a credit balance of 9,600. This is all money that we owe in the short term. And the loan interest due, again, from the notes, we looked at loan interest. So the loan interest, we said for the year was 3,600, but we paid 1,500. So what we still owe, or what's still due, is 2,100, and that will go in our balance sheet. So if I add up my creditors' amounts due within 1 year, they come to 49,400, and my current assets minus my creditors' amounts due within 1 year leave me with working capital of 55,590. And that, added to my total fixed assets above, will give me total my balance sheet or my total net assets of 524,390. Now to finish off the balance sheet, we need to look at the finance by. So finance by is our heading, and the first thing we're going to have underneath that are our creditors' amounts due after 1 year. So that will be our long-term loan. So from the trial balance, we can see that the term loan is 60,000. We've got a loan of 60,000 during the year. Capital and reserves. For our capital, again, we're going to be just getting that here. So that's our long-term loan of 60. From our capital, we will get from the question. So capital in the trial balance was 202,000, and that hasn't changed throughout the year. So the capital is going to be 202. The profit and loss balance is going to be coming from the final figure from our P&L, our retained profit at the end of the year, 275,490. So I'm going to add these to give me 477,490, and then I need to take away the drawings. Okay, so the drawings, again, we looked at in the notes. So for the drawings, they increased by €900 throughout the year. So at the end of the year, drawings were 13,100. And that needs to be taken away. And I'll just put it in as 13,100 and take it away. So that comes to 464,390. And if I add that to my creditors' amounts due greater than 1 year above, I get 524,390 for my capital employed. And as you can see, now my balance sheet is balanced. So I hope you found that video useful. If you did, please subscribe to the YouTube channel, and there are lots more videos there for ordinary level students. Thank you.